All right, so let's take a look and see which portfolios have performed the best in the month of March when the market has just taken a beating like it has. Um, the brighter green are the better performances, and the dark red are the worst. And just kind of skimming through this thing, looks like see beta returning down, which is going to be basically defensive companies that perform well when the market is doing bad, with a little bit of return thrown in, which means those companies tend to return the most. Dividend beta and down, same thing, all defensive with a great dividend. Same here. Now this one is more pure, right? We're talking about the best returns, but also this portfolio reacts the best when the market is taking a downturn. Beta and down. This is purely companies that react well when the market is down, and down moves. You can't get any more pure than that. And then returns. So there you go. So the return portfolio has not performed the best, but better than the rest. And so, looking at the last couple months here, what I'm trying to figure out is exactly what the market is doing. What are people buying, right? And so we're looking for green patches. We're looking to get away from the red patches. Stuff like these yellows are kind of, in the middle, not doing great, but not doing bad, right? And so, um, to my eye, looking at this, um, just over the past couple months, it looks like, just like this month, look at this, see? Beta return, beta alpha. That alpha is basically the same thing as return, okay? Alpha just simply means that when the market is up, these companies perform the best. Beta is when the market is down, these companies perform the best, okay? And so that's the reason why it makes sense that this thing will be kind of in the middle, but look how green it is. It's not yellow, and then this is beta and return, all right? So I think this is where we want to be, and we'll look and see. So when we're looking at purchasing, these companies here that we have available with buy signals, we'll look to see which of these companies are in those particular portfolios to help us get an idea of which ones are going to perform the best once we purchase. Let's just keep looking here. Um, this one's not so bad. Return and alpha. So again, it's those return companies. Beta return alpha, same thing. So I think that's where we want to be for sure. The rest of this stuff, just red. I mean, the dividend portfolio, that thing has been bad for a long time. It did have that one great month in December, which obviously at this point was a complete outlier, right? Compared to the rest of the months. And this can be seen as probably a turning point in the market. When everyone was purchasing something defensive because they knew the market was headed down, right? Yeah, the rest of this stuff is red, red, red. I mean, deep red. Oh my goodness, look at this one. Dividend, standard deviation. Oh my goodness, that was horrible. So what this is it's a dividend stock, right, with a high dividend, and then standard deviation is simply saying that this company, the price moves the least. The price doesn't go up very much, doesn't go down very much, right? It kind of stays where it is, and a lot of times what that means is that there's not a lot of people buying those companies. And so when the market sells off, when everyone sells everything, these companies get sold off with it. And so if there's not a lot of people buying, then those sales happen and it takes those companies down fairly quickly. But yeah, I really like the beta return, the beta alpha. These look really good, and so that's what we're going to look at getting into.